Hey there folks, great to be with you. A question, when you think of investing, what's the first thing that comes to mind? How can you take advantage of non-traditional investments, maybe things that don't come straight to top of mind? I'm Aaron Young, Investment Insight starts right now. And great to be with you. Welcome to the program presented by The Investor's Way, where each episode we dive into the world of wealth creation and provide practical tips of how you can master your money. Now, Australians may be obsessed with property, we all know that, but Americans often favour the stock market. Today, though, we are diving into something a little bit different, non-traditional investments that are gaining traction. Welcome back, Andrew Woodward from The Investor's Way. So we think property in Australia, there's so much there, and people always say it's the only way to make money. And then you've got others in America who are always looking to those blue chip stocks, tech stocks as well in the NASDAQ or the S&P 500. What else is there?
Well, we've got gold, silver and bonds. So I describe them as defensive assets, non-traditional assets, and they are a great way to extend your portfolio and provide a couple of little extra benefits. All right.
Now feels like a great time to talk about this, because in the US, they're now looking at reducing rates, which means that a lot of investors, you would imagine, would flood back to the stock market. You also have a war in Ukraine, an ongoing war that seems to be intensifying in the Middle East, which, as you say, is usually the time that people start to look towards gold and towards these sorts of resources.
Yeah, so the thing to understand is that traditionally, people will move into these defensive assets when everything else is going so badly. Not quite happening at the moment. So in 2024, we're seeing records everywhere, and including gold. And so it's an abnormal time in the investment markets that's happening, given also everything you just said, potential wars, interest rates dropping, stock markets all-time highs, all those things. And yet we're still seeing the non-traditional investments performing well as well at the same time.
Can you remember a time where it was all happening at once like it is right now?
Well, look, I'm on the wrong side of 50 and I haven't seen it this way. It's been traditional. Stock market performs well, money goes into the stock market. Property market strong, money goes there and out of these other defensive assets. And so to see it all happening at the same time is unusual, and for me, interesting to see what's going to happen next.
But that seems to be the problem. What's going to happen next is that a reason why people might not be making a decision at the moment, because they are so uncertain? Will the Reserve Bank of Australia cut rates by the end of the year? We now know probably not. Will the Fed cut rates even more? We believe possibly yes. Therefore, if people are making key financial decisions now, what should they be looking for?
Well, look, in terms of decisions that people are making right now, one of the things that we're seeing is a lot of fear. Stock market's at an all-time high.
Fear of missing out or fear of making a mistake?
Fear of making mistakes here. So it's with both the Australian and the US markets stock markets at all-time highs. Most people are thinking, well, the only thing it can do next is go down. Not necessarily the case, because we've only just gone past previous all-time highs. We're not like we've not set these dramatically higher all-time highs, which I believe is still possible. So the challenge that a lot of people are facing is we're at all-time highs. I'm fearful that the market's going to fall, so I need to get out and put my money into a more defensive asset, like maybe gold, silver or bonds. But then at the same time, we've got potentially interest rates dropping and what impact that might have on, say, a bond investment, and people are very, very confused. You
strike me as a long-term trader as opposed to a day trader, right? You strike me as someone who likes to look at assets, not emotionally, look at the data and make key decisions based on where things are going and their past performance. How does that go when it comes to gold compared to property, compared to stocks?
Look, gold is an outperformer for a short period of time when everything else is going badly. But the problem is most people don't know when that time's going to be. And you're right, the disguise is gone. I am a long-term guy. And so when it comes to an investment like gold or silver or bonds, I'm not about trying to time the market. I mean, sure, we can finesse that a little bit, but we've got to be in it to win it is a common theme that we hear, and it's no different with gold. Like, we don't know exactly when it's going to take off. Like this year, when all indicators were that the stock market was performing well, so gold shouldn't, but it did.
Is it because gold doesn't feel as sexy as buying a NASDAQ stock, for example, or having a company that you are emotionally invested in, like an Apple or a Disney or an Nvidia? Does gold kind of fall by the wayside there?
Look, I'm so excited that we finally brought sexiness into the investing discussion. And you're totally right, gold is a boring investment. But in fact, I teach people that so are stocks. We don't want to get emotionally attached to our stocks.
Yeah.
We want to base our decisions on data. And so gold, yes, it's less sexy. It's a slow mover, a slow burner, but when it takes off, when it's the right time, it takes off and it goes very, very strongly.
How does one invest in gold? I mean, is it going to the jewelry store? Is it, I'm asking basic questions. I know that isn't the answer, but give us an idea, because most people know that there is an app if you want to buy a stock. There are apps and people who will very much help you buy a house. What do you do when it comes to gold?
Yeah, so there are three ways you can get involved in gold or silver or any commodity for that point. And yeah, you can buy the exchange traded fund where they go and buy the physical gold on your behalf, and you're just buying into that investment. And effectively what you're doing is you're buying the movement in the price of gold. Really simple entry-level investment for gold. You can buy the physical gold, so you can go to those companies like the Perth Mint or ABC Bullion who will buy the gold on your behalf, store it on your behalf, and you will physically own the gold itself. And then the third option is to buy a mining stock who specialises in gold, silver, or whichever commodity that you have an interest in.
And there are plenty of those in Australia.
Plenty of those, highest of all the risk, because there are plenty of those and not all of them strike gold, and not all of them therefore go on and make profit. So I tend to stay away from the mining stocks until they've proven themselves. And then you've got the physical gold and the ETFs, which are a really easy way to get involved.
Okay, so we talk about gold and we talk about the difference in that compared to buying into property. And obviously when it comes to property, you need a lot of money in the bank. When it comes to stocks, you can make a choice about how many stocks you're going to buy. What is it like when it comes to gold? Yeah,
so the same with gold and all the commodities is ETFs you can do with just like any stock. So it's a small parcel size, $500 or $600, and you're in. If you're looking to buy the physical products, you can go down to as little as 1 ounce.
Wow.
And they will store it on your behalf. Now, surely they're not going to have that 1 ounce just sitting separately. You'll own a portion of a bar, but ultimately you can invest small amounts of money, which is extremely beneficial for those people who are fearful that they need large sums of money to invest in these types of assets.
We're spending a lot of time talking about gold, but as a lot of Olympians will say, any metal's a good one. Silver, bronze, different story. What's the rules there?
Same stories with silver in particular. Silver is the poor cousin to gold. Obviously, the big money flows into gold and less so into silver. But at the moment, one of the things that excites me about silver is historically there's been a ratio between the gold price and the silver price. And at the moment, we are disproportionately away from that ratio where gold has risen a lot more than the silver price. So there's a theory out there that silver has a long way to go to catch up. So, yeah, Is that because, though, I'm asking from a technical side, gold is used in things like computer chips? Does silver have the same level of need and usage at the moment as what we're seeing with a worldwide chip shortage? Well, I believe silver is actually used just as much.
Oh.
Now, I don't have the data to tell you exactly.
Well, you said it on television. It's
well,
real
therefore
now.
it must be true. But gold is often used as a hedge for governments, and large corporations use gold as their hedge against other things. So there's a lot more demand there from that perspective. But silver still has a lot of a use case, and I believe, like I said before, there's that potential for that uplift in the silver price.
I know you never like to favour one investment too much over another. How would a resource, a commodity like gold, silver, bronze fit into an investment portfolio?
Yeah, this is a really important point, and it comes back to liquidity. So we get to retirement, we want to live off our assets, and if all of our assets are tied up in property asset, it's a big deal to sell one of those to go on a holiday. Whereas a gold or a silver or a bronze or whatever commodity is your favourite is saleable and convertible to cash in a very short period of time. It's a lot better way to manage the liquidity of your retirement assets. So I'm very much about spreading your assets across different asset classes, different risk profiles and different liquidity profiles so that you've got the best of everything.
Okay, let's say you're 35. Right, we're talking a lot about retirees, but let's say you're 35. At what stage do you look towards gold compared to buying your first house or investing in stocks?
So again, we come back to my definition of these assets as being defensive. So they're the asset that we invest in to protect our other investments, so our property and our stock investments to an extent. And so at 35, we still should be thinking about a portion of our assets in these asset classes so that over time we get the capital growth. They're less about income, but more about the capital growth and that explosive growth when it comes. And so it doesn't matter how old you are, you should be considering it as part of your total portfolio of assets.
Okay, and what about timing? So obviously when it comes to the stock market, you're looking for when there's a sell-off to try and buy in. When you're looking at buying into housing market, you're looking for a bit of a dip so you can get a bargain. What's the rule? Is there a rule with gold?
Yeah, so again, these assets perform when there's normally an economic downturn.
Yeah.
So as soon as you start to hear that that's a possibility, that's when you want to be in it. If the market has crashed, you've probably missed the boat.
Which, to be honest, feels like now might be a good time given the geopolitical events in the world, right? Because gold feels very much tied to geopolitical events.
Absolutely, and it's like I said before, if there is a war or there is a stock market crash, cash will flow to gold and silver.
Is the fact that governments are investing in gold, just taking you back to what you said earlier, a clue as to what they believe is coming next?
I think we always like to take clues if we can get them. And if governments are starting to move some of their cash into gold, that is definitely an indication that they're taking some form of protective measure. And if they're doing it, why not us as well? But as I said before, it's not about timing, it's time in. And so, yes, now's a great time, but it's always a good time.
Yes, I'm just waiting for the gold ring, and I think that'll be it for me.
Well, you can wait or you can invest.
All right. Andrew Woodward, always appreciate your time. Thank you.
Thank you.
And of course, a reminder that the program is for informative purposes only. Always do your research before making any financial decisions. To learn more about how you can master your money and to make investing sexy, of course, as we say, visit theinvestorsway.com.au. I'm Aaron Young. You've been watching Ticker. We'll be right back.
You're watching Ticker. We'll have more in just a few minutes.